look at Tesla earnings, basically.
Yeah.
All right. Thanks, Steve. You can share your screen now.
Okay, so I'm on Tesla now, and I think the question it was a kind of general, but just to do a review or analysis of Tesla earnings and maybe how to use some of the analytics in your research or strategizing. So let's start over here under earnings. We'll take a look at these interactive charts, we call them. I'm going to close this menu just to expand our screen. And we're going to get some analytics using Tesla's historical earnings. And this will give us kind of ranges and averages and statistics on what happened historically in Tesla. And that can help us model out, potential outcomes and how the current markets compared to those historical outcomes. So let's start on this page, and you could see here that there are different reports to the right that we could click on. Up top, we have this summary view right now, and then you go for more details deeper into these reports. So let's look at first on this summary. And here we look at what was the historical average implied move prior to the earnings release. This is coming from the options straddle. So if we look at the options straddle and we said, well, where did that option straddle typically on average closed at right before Tesla reported earnings? Okay, so this is telling us that on average, the straddle implied an 8.4% move in either direction. So a straddle, what is a straddle? You're buying a call and a put at the money strike, right? And the stock has to move. If you're buying the straddle, it has to move by a big enough percentage to cover the cost of the call and the put, and then exceed that for it to be profitable, right? So if you're buying a call for $1 and a put for $1, well, you pay $2, so the stock has to move by more than $2 away, for that to be, in the money, let's say. Okay, so we showed as a percentage, because in dollar terms, it's not always the same because the stock's at different places at each earnings. So we look at it as what is the percent move. So here it's telling us on average it's 8.4%. So let's just click on that. And here's when I click on it, it's under here, implied earnings moves. We'll see a history of it going back to 2014. And what this is saying is that on average, right up to the end of the day, the implied move was 8.4%. That was the premium. The high was 15.5%. The low was 4.1%. And the median is 8.3%. So this helps us get an idea of where potentially the straddle may be priced by the end of the day. Right. So right now, we still have a day to go in earnings. We're not open yet. We're this pre-market, but we still have a full day to go in earnings. And it's going to fluctuate, right? Implied volatilities are moving around. Sometimes there's going to be sellers. Sometimes there's going to be buyers moving it. So that straddle, it's not fixed. It's going to, just like the market, it moves around, right? So where did it go out yesterday? So yesterday, this is this light, you see this light bluish bar. This is where we're at right now. This is as of yesterday's close. We're not open yet. And what this is saying is that yesterday's straddle implied a 9.3% move. Right? Compared that to the average of 8.4%, you could see that's not quite 1% above, but like 0.9%, above its historical average. Definitely within the high-low range, 15.5, 4.1, above the median. And again, that might be fine as well because Tesla still has an additional day of earnings additional day of trading besides the earnings event. So it could still move today, right? So it would make sense for the straddle to be priced higher in the morning than at the end of the day. And you can see here, even in the pre-market, Tesla's already, it has a 1.1% move in pre-market alone. So that doesn't look like anything unusual. It's not necessarily, it doesn't look cheap. It doesn't look expensive. It's probably just in line. But now we can, make those, inferences based on that historical data. So here's this dotted line, and this shows us the average of all of them. Right? This is the average of all those straddles. And we also just see, the variance. We could see that it's not like, all of them are on this line. You could see some are above, some are way below. So this straddle itself, wherever it ends up, can have a big variance. Right? That's what just the data is showing us here. That the range, right? The range that it could close at can be somewhat wide, right? 8.4% is the average, but that doesn't mean that it's going to be, that historically it's like between 8.2 and 8.6. You could see that how far away from that average line it's closed that historically. And up here, what else we could do is narrow down. So this is going back and looking at all the earnings, right? So if you're just, and by the way, that could be a strategy on its own. You don't have to hold a straddle around earnings. You could just, the strategy is what do I think the straddle will close, and then you close out of that strategy. If you're holding it as a trade from morning to the end of the day, right? That's all you want to do. You don't care about the earnings event, because there's more uncertainty, but maybe you want to take that exposure where you think it's going to close by the end of the day at a certain level. So what if we wanted to narrow down this data and see what it looks like based on the quarter? This is showing us all the earnings, but Tesla is coming out with Q2, second quarter earnings. Well, maybe second quarter earnings looks different than the average of everything. Maybe it does tend to close higher second quarter, right? There could be more uncertainty on certain quarters of the year or something going on that the volatility is different. So we could use these filters above. And here's Q1, Q2, Q3, Q4. So let's go ahead and select Q2. And now that we did that, now we have the statistics for second quarter earnings going back to 2014. So second quarter, you could see only happens once a year. So we have one going back per year down to 2014. We could also just narrow that down if we wanted to. But let's just keep all of them up there for now. And here we see that the average that it tends to close at, or that it closed at, was 8.1%. The range was 13.5% to 6.1%. the median is 7.2%. Right now, we're at 9.3%. So looks kind of within that historical range, right? It's not all the way, up here or all the way down here or below. This is within the range, above the average. But that kind of makes sense that it's above the average because, again, we still have a full day of volatility in trading before the end of today and the upcoming event. All right. So now we kind of get an idea of historically where this straddle tended to close. Now I'm going to come down here, and we could also just put in place, if it's 9.3% right now, if the stock doesn't move that much, if we gave it 9.3%, let's just say that the straddle stayed exactly at 9.3%, given the historical data, this is saying that 91% of this data that we have filtered out, the straddle closed below 9.3%. So using the observations, you could see that most of the data shows that it closed below 9.3%. And we could just put that in there ourselves and change it. Say, if we just say, well, by the end of the day, if it closes at 10%, how does that compare historically? So recalculate that. So 92% of the historical observations were below 10%, 8% were above. Let's go back to all. Let's look at all the data. So if I use 10% on all the data, you could see 86 of the observations, all these, 86 were below 10%, meaning that the straddle itself, at the end of the day, the premium implied less than 10%. Okay. Let's say if it was very low, maybe if the straddle was like, let's say 6% right now, and we recalculated, well, that would mean that the straddle's priced pretty cheap because only 5% of the observations were below 6%. I mean, 95% of the time, historically, the straddle would have been priced higher, like 7, 8%, whatever, which means that it would be cheap. Now, keep in mind, percentage-wise for that straddle could be a big deal. From going from 6 to 8% could be a percentage-wise big deal. And how did the straddle actually tend to be priced? So this is telling us that if we looked at all the data, 61% of the time, the straddle overestimated the move, 38% it underestimated the move. So this means 61% of the time, wherever the straddle closed, the stock the next day the move didn't exceed that implied move. 38% of the time, the straddle was priced too cheap. The stock actually moved by a bigger percentage than the implied straddle. All right, so that's these implied. That's what these implied moves are over here. Okay. We have some other, how was it? Just as a comparison, if we wanted to kind of get an idea, well, when the move was actually up, right? Did the straddle look different? Like, was there a indicator somehow in the straddle pricing that when the move was higher than different than when the move was lower? So when the move was actually up the next day, the straddle the day before on average was priced at 8.5%. That's the average. So what about when the move was down? Was there like an anticipation, like on a down move, maybe the straddle tended to be priced differently and higher than when the move was up. So let's look at that. So what about when the move was actually down? How did the straddle look like the day before? So you could see on average, it was priced at 8.2%. So close. They're pretty close and not like significantly different. But what's interesting is that when the move, when the straddle was priced higher, like let's see the median 7.7.
AD?
Yeah, versus 8.5. Yep.
This came in from Rob. Unfortunately, there's a little bit of a delay, so it may be you'd already touched on this. It says, so is it an indicator that the straddle may not work if over 90% of the historical data shows that the straddle below the 9.3%, or does that depend on how much of the straddle must move to be profitable? He said, I believe it was discussed yesterday on some chart, which I forgot how to get to, showed the amount of the move of the straddle to be profitable.
I'm not sure. You'd have to read that again.
All right. It says, so is it an indicator that the straddle may not work if over 90% of the historical data shows the straddle below the 9.3%? Or does that depend on how much of the straddle must move to be profitable?
So let me just let me come back to just so I could see what. So when you're, yeah, hold on. I think you're talking about this 9.3% over here. So what this is saying is the following, that if the straddle closed right now, let's say it's the end of the day, right? If it's the end of the day today, and the straddle closed with an implied move of 9.3%, like this, we could compare, okay, is that on the high or low range of the historical observations? That's what we're doing. Just we don't know what's going to happen, right? We don't. It's impossible for us to know, because if we knew, then this would be an easy game for everybody, right? Anytime you know something is going to happen, it's an easy game. But we don't know that. But what we're trying to do is assess where we're at, on the historical range. So if it closed at 9.3%, and we could change this, is that on a higher or low range? And one way we could look at it is if we took all the observations, right? Like say all the observations we had, and we just sorted it from high to low, right? That's one of the first things usually you just do, just say, okay, show me from high to low. Just show me all the observations. And then we'll say, well, how many of them were below 9.3%? And this is telling us 74%. 74% of the observations were below, right? Meaning 26% of the observations were above. So you kind of get an idea, right, where you are, if you put on a scale, where you are in the historical range. Okay, that's what this is shown. So you could change these numbers, right? So as it's fluctuating around, let's just say it's fluctuating around today. And let's say it's 11 o'clock, 11 a.m. We're looking at the straddle at 11 a.m. in Tesla, and we're saying, okay, it's 11 a.m. I got 5 hours of trading left, right? We're not closed yet. We still have 5 hours of trading left. And let's just assume that the straddle right now is priced at 7%. So I have to decide, is that high or low if I intend to close out of it by the end of the day? Is that high or low? And, what I want to try to figure out what probability is that it could go higher, right? So let's put in 7%. right? Let's say the stock is, let's say I put 6%. Let's say the stock is $100. It's going to cost me $3 to buy the put, $3 to buy the call. I paid $6, right? I paid $6 for this straddle. I want to close it out. It's 11. I want to close it out at 4 o'clock. But what am I have to kind of figure out, is $6 a good buy? Like, what are my chances it could go higher? Is there a good chance that it could go higher? Right? That's what I want to figure out. Is there a good chance that by the end of the day, this straddle will get pushed higher? Well, if the straddle is implying 6%, I have to see, well, what does it usually end up? Where do we usually end up, right before the close? So this will say, okay, if it's 6% now, I'm going to calculate it and say, well, based on all the historical observations, 95% of the time it would have closed higher, right? So 95% of the time it would close higher. Now, keep in mind, this has nothing to do with trying to hold the straddle over earnings. This is before earnings, pre-earnings close. Okay, so forget about earnings. This says I have no desire to play the earnings at all. It's just where the straddle will close pre-earnings. Okay, that's what we're looking at right now. Let's say it's 11 o'clock, and the straddle really, all of a sudden there's a flood of buy orders, and the straddle gets pumped up, and it's gets pushed up to 17%. So is it likely to stay at 17%, or by the end of the day, would it maybe get pushed closer where I intend to close it? Well, if I put in 17%, could say, well, whoa, historically 100% of the observations close below that. So from the sell side, sell at 11, close out at 4, is there a good chance that you could buy back lower? So this is kind of the statistics we're looking at. We don't know where it's going to end up, but we're using the data to help guide us, potential outcomes. Hopefully that helps. But we're right up at 9:30, Will, so I'm going to end it right there.
That's great, D. Awesome job, my friend.
All right. Thanks, everyone, for joining. Stay safe out there, and hope to see you guys tomorrow.
Trade in peace, chameleons. Everyone have a great